If you are thinking about getting into real estate investing, maybe you speak with your neighbors, friends, and colleagues. They speak about buying rental properties, growing their portfolio, and you wonder how to get started. This video is for you. Stay through the end. I'm gonna share 5 points that will lay the framework for your success in creating long-term wealth and ensuring financial freedom, something which you could pass from generation to generation in a tax advantage manner. You will be surprised at 4th point. I'm your realtor Dinesh Singh from Val Ventures Realty. I have helped many clients kickstart their real estate investment journey. I'm an investor myself, and here I'm to help you start your rental investment journey. Bottom on the screen, you see my contact information. Call me, text me, email me, and I'll be happy to share tips and tricks and help you get started on this path. So 5 point, the number 1 point, the topmost, the most important is setting the goal. We all have seen in our day-to-day life, if we do not have goal, where we want to reach, what we want to attain, we tend to wander aimlessly, or even if we attain the goal, that won't be the most efficient manner. In real estate investing, it's driven by your personal and family goals. Typically, some people start investing in rental properties because they want to get away from W2 job. Maybe they hate their manager, they hate their job, maybe they hate commute, maybe they hate the company's purpose. They want to replace their W2 with rental income. For some, it's a retirement plan. In many companies and federal jobs, they do not provide you pension once you retire, and you want a steady, reliable source of income. That's where rental properties play a crucial role. You need to start this investing journey keeping end goal in the mind. Where do you want to see yourself and your family 15, 20, 30 years down the line? That will help you navigate the path, design the structure, and guide you to take action in a very planned, diligent manner. Many families who have young children, they buy properties for their kids' education when they're blessed with baby, and in 18 years, the rental property would have paid significantly or maybe fully paid, and that would be ready to pay for kids' college education. Think about it. Start with the goal setting. Look at your future self, maybe 15, 20, 30 years, where you want yourself, your family. Where would you get a reliable, predictable source of income to run your household, maybe to pursue your dream? That's number 1, very important. The second point, look at the city, look at the destination before you look at the property. Why I say so? I see many people get excited when they see a good online listing, maybe in Zillow, Realtor.com, Redfin, and they get excited. They forget the basics of investing, which is first look at the city. Finalize the city, the location, before you finalize the property. There are many guiding factors. It's population migration. Is city bleeding population, or more people are moving in the city? What is the population growth? Is it expecting a new company to come in or a new hospital to open in near future? That would attract more workers, more population. Population inflow is the topmost parameter in my opinion. There are other parameters. Wage growth. What is the employment base? What is the master plan for the city council? Many city councils, they have plotted their city growth for next 15 to 20 years. Read the master plan or work with a realtor. I'm ready to pitch in and work with you and get all the insights from the different cities that I cover that I assume would help you grow your wealth, appreciate your property. Number 3, take action. So many people get lost in analysis paralysis conundrum. They never take action. We all know one friend, one acquaintance, friend's friend who has been waiting the housing market to crash since 2008. They never bought their primary residence. They've been paying rent. or they were presented with countless opportunities. The stock market, housing market has gone through more than one up and down, and people have created wealth. Many people, they bought their primary, they got into rental investing, they bought 1, 2, 3, 4, they refinanced, bought more properties. So many of people in my day-to-day conversation, they are waiting for interest rate to drop. Yes, interest rate is high, but real estate is no short-term game. If your time horizon is 5 years or more, maybe 10 years, 15 years, which ideally should be, these things would even out. And as is general consensus, interest rates may go down, and you may have an opportunity to refinance the interest rate, lower your mortgage payment. But to be able to catch the upside, you need to be in the game. I do not want you to wait perpetually for the ideal condition. You might be missing on a lot of upside. Many of you are in executive position. Maybe you are a director, vice president, or running a business, or whatever you're doing right now. Roll back years, 10, 15, 20 years ago. Did you know that this is where you would be? Maybe you took first step, second step, and the clarity for the path begin to emerge. Have faith in the process. Real estate investing has worked for millions. That's where the wealth is created. That's where affluent, ultra-rich, wealthy families and individuals invest their money for a reason. There is history, there is data. Trust the process. As long as you are investing in right cities, right neighborhood, if you are investing in a C-class, D-class neighborhood, much of it may not apply. Be careful, but take action. Don't fall for analysis paralysis syndrome. The number 4 point, which is very important, and I often see many folks got stuck. They find it hard to wrap their head around, and it is connected to third point, which is analysis paralysis conundrum. The fourth point is do not chase cash flow. Unlike the stock market or many other form of investment, the cash flow is one way of making income in real estate. The cash flow is simply the surplus amount from your rent after deducting all the expenses, which could be mortgage payment, which could be insurance, which could be property taxes. In a layman term, that's the cash flow. That's one way of making money. In real estate, you make money 4 ways. Cash flow, the equity build-up, which is the part of your mortgage goes toward your principal payment, and you build equity every month. Number 3 is tax deduction. Real estate is the most tax advantaged asset. Government has designed the code to encourage and promote investment in building housing. While you are building wealth and making steps toward financial freedom, you are also serving a social need. It's a good cause to be able to provide housing to families who need it. There are 4 ways of making money in real estate investing, not one. If you happen to be in the state of California, which is traditionally one of the highest appreciating state, the property prices are higher, but no state typically beats California for real estate investment. Properties appreciate, you make money through equity build-up, and you gain tax advantages. Isn't it powerful? My humble submission to you is to look at the deal in totality. Take a long-term view. Look at the big picture. Don't get stuck on one part of the quadrant. It has 4 quadrants. Cash flow, equity build-up, tax advantage, appreciation. If you also throw in at the center the leverage aspect, which is you only pay 20%, 25% of the price of the property. The remaining money comes from bank, which means other people's money. Tell me, which other type of investment allows you that kind of great leverage? Typically, real estate in California has appreciated slightly above the rate of appreciation, maybe 3 to 5%. But if I add in the leverage it gets multiplied. That's why real estate investing is the ultimate form of wealth creation. If you are in this for the long term, there will be some bumps along the ride. Let me not kid you. Sometimes there will be challenges. It will not be all rainbows and sunshine. There will be challenges. But if you trust the process, you stick to the foundation, you stick to the basic principles, you are bound to succeed because it has worked for millions of people. That takes us to the number 5. Define your real estate investment strategy. This aspect, real estate, is different from stocks. When you buy a stock, you don't play an active role in determining the movement of a stock. It depends on the company's management, company's R&D, company's market position, the regulation, compliance. You typically watch the game from the outside. You have very small role or probably negligent role in ensuring the movement, the direction, or the quantum of growth or degrowth for a stock. What if a competitor comes up with a far superior technological product? It has happened to many companies. What if an executive makes a wrong decision, bad decision? The stock tanks. So many stocks have stagnated since 2000. Many bad stocks, you take a look. What if a newer technology comes up? Or what if a government comes up with a new regulation that makes product obsolete or non-usable, non-compliant? But in real estate, you own your destiny to the large extent. That's what we're going to cover. Real estate strategy, investment strategy. There are multiple ways to drive your real estate investment. It could be buy and hold, which is the most common way of investing. Many of my clients, almost all of them, are part of this bandwagon, wherein you buy a piece of property and you rent it out, maybe long term for more than 1 year, medium term, which is 1 month and above, maybe 3 months, 6 months, or short term. It could be Airbnb, it could be Verbo, it could be Furnish Finder, and you make money. The second way of real estate investing is fix and flip. A couple of clients who have been in the world of investment for a while, and they're trying out their hands in fix and flip. You find a property which is in needs of renovation or maintenance, you add value, you upgrade, maybe flooring, maybe light upgrades like painting, the appliances or roof depending on the property, and you sell it for higher value. That's second type of real estate investing. Third part is house hacking. House hacking means you live in one part of house and you rent out part of house. It could be a room, it could be a part of room, it could also be an ADU, accessory dwelling unit. If you're living in a large lot, you can build an ADU, rent it out. And I'm sure you have seen in your neighborhood, somebody has living in the primary property and another family living in ADU. Another form of investing is arbitrage. Maybe you sign a contract with a property owner and you start investing and you start renting out on short term, maybe Airbnb. You deploy no down payment. Somebody else owns the property. You make money off it. You pay rent or as a long-term rent, but you make more money for short term, and you keep the balance in your pocket. There are multiple ways. These 5 points I'll lay down again for you. Keep your end goal in mind. Look at city, state and city before you look at the property. Number 3, no analysis paralysis. Take action. Imperfect action is better than perfect inaction any day, any time of the year. Number 4, look at the big picture. There are multiple ways of making money from real estate. Don't get hung up on one. Number 5, real estate investment strategy. Work with a realtor. I'm an investor myself. I have many clients who have invested in and around California. Get in touch with me on the contact information given on your screen, and I'll happy to get on a call, a Zoom call, and we can chart out your investment strategy based on your long-term goal that works for you. Signing off, I'm a realtor, Dinesh Singh. Let me know through comment what kind of video you would like more. If you like this video and if you find any value from this video, please do not forget to like and subscribe so you don't miss on these videos which come up every week, and share with your friends and family who are not already on my YouTube channel. Thank you very much and see you soon.